Of all the concerns sort of floating, India, margins, the revenue guide, what accounts for today's action?
I'd say it's two main things. India is important, but it's only 1% of the international revenue, $1 billion in revenue, not all that material. I would say slow down in advertising. If you back out some of the comps, it grew about 38% in the quarter year on year. That compares to 50, 60% growth in recent quarters. The one thing I just note here is law of large numbers. On a dollar basis, they still added $650 million in ad revenue year on year. That's up from $600 million the quarter before, 500. So we're facing a little bit of law of large numbers. Hard to keep growing at 60, 70%. Expenses as well. They weren't prescriptive on that count, but I think some of the qualitative comments from the CFO started, making folks a little bit nervous on that front.
Your thoughts on that? And is the investment cycle we've been through this before with these guys.
So to oversimplify a company that's anything but simple, they're growing pains, right? We're looking at the day by day, whether it's the largest company in the world or not. And what that means for investors, what that means for the company is figuring out, are we looking at a limitless addressable market? Is this an infinite sales opportunity? Is this a margin opportunity? Neither of those are going to be seamless. But the reality is, at the end of the day, it's probably a little bit of both, and it's probably a little bit of neither. And what I mean by that is what we're finding is the conversation is shifting. I felt like for the first time in a long time, I started analyzing Amazon as a company last night, not as just this infinite being. But the interesting thing about analyzing as a company is then I look at valuation, and valuation is not that aggressive, and it's a crazy thing. I feel like I'm looking at a business.
Why isn't it that aggressive?
If I look at 2020 and 21, it's actually trading, so I look at from the retail side, it's trading in line with Nike. That sounds listen, I like Nike a lot, we talk about it a lot, but putting into perspective of what this company can do as those margins grow. So as sales come down into, let's call it the teens, gross profit still grows above that.
Mark, what do you make of this deceleration in Prime memberships, or should we make anything of it? I mean, obviously, not everybody can have a Prime membership in the country, but the price increase perhaps mitigating some of the additions?
Yeah, so we're probably at 70, 80 million Prime members in the U.S. You tack on another, 30 something million outside the U.S. We're at the upper end of the S curve here in the U.S. So not surprising that you'll start to see Prime sub growth slow. On top of that, though, they've got a lot of pricing leverage. So what we did see is, a 20% price increase in the summer of last year. And despite that, the company said last night that they added the most Prime subs that they ever had in Q4. So I think we probably will shift a bit to ARPU and pricing from sub growth going forward. That's inevitable whenever you have the kind of sub base that they've got now.
And if you think about it from the context of, think about it like a discounter, right? Discounters, if you think about the BJ's, the Costco's of the world, you raise price pretty steadily. You get a churn the first year, you get some lack of renewals, and then it comes back up. It's a general process of getting people comfortable with that approach.
What about Whole Foods? Lower revenue there as well. What are investors' expectations for this, and where is the company in terms of what it wants to do with Whole Foods?
So it's probably yet to be determined. It's the first quarter where you can actually now look year over year, and unfortunately that first quarter came down. They attributed it to two different things with a little bit of nuance, but at the end of the day, that business on a reported basis did not grow, and there's really no way of getting around that. So I think we're going to have to watch to see as Amazon brings in these fixed costs, as Amazon enters this brick and mortar world, that physical store line item was negative. So that's something that I think we definitely have to keep watching. Again, to Mark's point about magnitude and context, it's not that large. But as we think about where the growth avenues come from, it's definitely going to be something to watch.
Your line about how for the first time your value, there's a big debate today about what shareholders want it to be. Or, do they want to buy it as a moonshot, or do you want to buy it as a discounted cash flow story? What do you think the answer is there, Mark?
I think we're kind of in a little bit of a middle ground right now. The company, has tripled earnings last year, tripled free cash flow. We're now generating over 10 billion in free cash, probably 15 this year on the path to 30 billion in free cash flow just 2 years from now, $50 in GAAP earnings. At the same time, growth is slowing. So you're kind of in this weird middle ground. I think that's part of the thing that people are grappling with a bit.
I think trading at 25 times that free cash flow number 3 years out, though. I mean.
Yeah, but it's also growing at 200% year on year.
And I was about to say, so to exactly that point, when I brought up the idea of valuation, Dave, your response was something along those lines. I think that if we're looking out, as we rotate our numbers and if we think these numbers do get there, and we're talking about a 10 times EBITDA company, not that far out, it just becomes a little bit of a different conversation. and we start saying, okay, maybe you don't want infinite sales. Maybe they're actually at a point. Listen, the India conversation, ultimately marketplace is the best margin. So there's sort of a guardrail there where if you have to give up sales, does that come through at a higher flow through? There's just a lot of different, it's in flux and there's questions there. I think to your point, which one is the right one, which one's the best one? They both might be good.
Mark, you surprised nobody asked about the divorce on the call? I mean, I don't know if it has any impacts. You know, if it was a hedge fund manager, we worried about distraction, maybe not that, but it is a big deal, though.
I'm not surprised it didn't come up. I think those kind of topics tend to be left for discussions offline.
Or for us in the press to actually ask.
No, but I mean, they have a serious stake in the company, and his
16%.
role is
Yeah.
pretty critical.
Yeah.
I would think that it should come up.
It's a good question to ask, but maybe not in that setting.